right before the earnings, where SoFi was at about $26 per share, I predicted that on the news, on the results, the stock of this company will surpass $30 per share, and this is exactly what happened. The stock of this company has reached a level of $33 per share, but pulled back significantly since then, both on the overall correction of the market, but also on the news that SoFi launches $1.5 billion in public offering of common stock. In this video, I'll talk about what to expect from SoFi going into 2026, what's going on right now, and what are the price targets of Wall Street analysts. Hey there and welcome to the Market Monkeys channel. If you will find this information valuable, useful, don't forget to support this channel by pressing the like button and subscribing. So first things first, let's talk about something that really upset the market lately, and it was actually the offering of $1.5 billion of common stock. Investors got really upset by the news, and it is understandable because it means that the company actually dilutes existing shareholders by about 5%. This is a significant sum of money, but for SoFi it's not that much. But the market got really upsetting, sending the stock of this company down about 6%. And the reason was that at the moment of the news, the stock has been trading at $29.4 per share, but SoFi priced this public offering at $27.5 per share, so significantly lower than the stock price was back then. Now, in my opinion, this reaction of the market is overdone because, first of all, this is not the first time SoFi does this. They did something similar back in July, and the stock of this company also dropped on the news back then, but it recovered very quickly in a span of a couple of weeks. Now, why the market reacted so negatively was because usually when the company issues more shares, it could mean that the company is in trouble, and investors start to feel that something goes wrong and maybe this company burns too much money and cannot sustain its operations. Now, this would be true if SoFi would be this unprofitable company that it was a couple of years ago, but under these conditions, this could actually be a good thing, and here's why. Now, first of all, on the recent earnings, company posted 8th consecutive quarter of GAAP profitability, which is amazing. And in general, if we go to the income statement, we would see that quite for some time now, or since December 2023, this company is actually profitable. They went from $50 million at the end of 2023 to $140 million at the end of 2025, which is a significant growth of net income. Now, at the same time as they were growing and as they were achieving profitability, they were working on their return on invested capital. While this number is still not really strong for SoFi, it could be much better. They are positive and they have actually been improving since 2021. So at the moment, return on invested capital is 6.2%, again, which isn't a lot, but together with the fact that SoFi has many developments coming in 2026, return on invested capital could actually improve further. So when public companies raise capital like this, it could mean one of two things. Either they're in defense or they're in offense. If the company burns cash, if the company is not profitable, then most likely when it raises cash, it's in defense, and it means that maybe something is wrong with this company. When the company is profitable, when the company is growing, when the company invests a lot to continue this growth, it means that the company is in offense, and this is exactly our situation with SoFi here. Going into 2026, this company has many developments and actually some great results. So first of all, their main focus is on their loan business, and they are trying to grow it, but they are trying to transform it at the same time. So basically, from being a company that gives their own money from their own books to the customers, they started originating loans from their partners. Meaning, instead of rejecting borrowers or holding the loan, as I already explained, they go to partners like Fortress or like Blue Owl Capital, and they actually take money from there. From this, they're getting fee-based revenue, which is effectively risk-free because they're not participating in this loan processing. They simply connect the person to the institution that is ready to provide this loan. And this way, they actually increase return on equity, which is very important. Chris Lapointe, their CFO, actually noted that fee-based revenue is now 40% of total revenue, up from 25%. So the company is working toward this goal. The company is working toward increasing the number of loans, but not actually taking the risk on that loans, which is a great strategy, and it proved to be working amazingly. Another exciting thing that should launch in 2026 is crypto and stablecoin. And if we take a look at the release of this company from November 11th, we would see that the company said, as crypto ownership continues to grow, SoFi is expanding its one-stop shop to become the first and only national chartered FDIC-insured bank to offer crypto trading to consumers on a platform built with bank-grade safety and stability. This is a very interesting direction to grow in, and while I am myself pretty skeptical, for example, about stablecoins, I am not sure it will be something huge and the company will be able to make huge returns on this. But anyway, I appreciate that the company tries and that the company spreads their eggs. They're not putting their eggs in one basket of loans, for example. They try all of the things: investing, credit cards, loans, refinancing, and basically anything they can think of. Stablecoin is one of them. So in 2026, as they launch this stablecoin, I actually assume that this will be a major catalyst for the stock of this company, whether it will work or not. The market will most likely get excited and reward the stock, so let's see what will happen. Now, as we take a look at the valuation of this company, it looks really expensive from one standpoint, but if we take a look at the growth, you can immediately understand why the valuation is so rich. Now, what to do with all of this? So first of all, let's take a look at Wall Street analyst price targets. As we're headed into 2026, Wall Street analysts don't really understand how to eat SoFi, because on one hand, the stock of this company is growing so well and doing so well, but on the other hand is already pretty expensive. So if we take a look at the price targets, you would see that the average price target at the moment is at about $27.15 per share, which is pretty much exactly where the stock is at the moment, with highest price target at $38 per share and the lowest at $12 per share. Now, if we break it down to the companies, we would see that Morgan Stanley has pretty bearish outlook for SoFi, targeting $18 per share, while Mizuho actually has a buy rating, and it gave the stock of this company the highest rating on the Wall Street with $38 target. So where does this leave us and what to expect in 2026? Heading into 2026, we expect more rate cuts, which could definitely help this company, and their CFO have actually said that if the rates will drop 50 basis points, their total addressable market for student loan refinancing will grow by about 25%. Together with everything that I named before in this video, it looks like SoFi is positioned to grow in 2026. But of course, there are risks. And of course, together with this current administration and with everything that happens on the US market, we could expect some volatility. So I don't expect that this will be a smooth ride in 2026 for SoFi, even though for now it looks like all of the catalysts are in place and the company has much more tailwinds than headwinds. But even though together with this there are of course risks, and if the market will be correcting, SoFi stock will be dropping by a lot because it's expensive. The moment the market will get scared about anything at all, maybe even not related directly to SoFi, the stock of this company will crash stronger than the market because investors will get afraid to hold their money in so expensive stock. Just remember this. So my personal price target for SoFi for 2026 would be anywhere between about $30 to $40 per share. Now, the management of the company has already guided for the earnings per share at about 0.55 to 0.85 0.8, which is definitely optimistic, but together with loan platform business and together with lower rates and with student refinancing, this company could actually achieve that. If the company is going to grow at the same rates and if the company is going to achieve 0.8 earnings per share, the stock of this company could pretty much go to 40 by the end of 2026. Now, this is pretty optimistic outlook, and I would really like to hear your opinion. What do you think about SoFi and what is your price target for the stock of this company? I thank you for being with me. Don't forget to like this video and to subscribe to our channel. I'll see you the next time. Happy investing!